Chevron. It was up 1.29%. It's a big oil company, big energy company. Market cap's really high, 263 billion. Revenue is 191 billion. And the PE is 16. That's a really reasonable PE. We just saw Coinbase and Robinhood way up. So I think that as we look at 2025, value stocks look pretty good. The PEs look good. Analysts believe they're discounted. So Chevron's a pretty good sized position in my portfolio. I own about $95,000 of Chevron. It's maybe the fourth or fifth most expensive or valuable position in my portfolio. Forward PE is 14.5. Again, very reasonable. Dividend 4.44%. Really nice income stock. And over the past year, it's down 1.64. So it's had a nice rise recently, principally because oil prices have been going up. As oil prices go up, oil companies do far better. And it looks like in the after hours, it's still rallying a bit. Chevron's a very good run business. I've been a stockholder for a long time. And these guys, their revenues have been coming down, but not because the company is operating poorly, but because oil prices have been down. In 2024, we saw oil prices really go down. And it's good for the consumer because I know gasoline prices were down as well, which is easier on the pocketbook. But an oil company will see its revenues go down when that happens. And that was the case for Chevron. The trailing 12 months, 0.56. But with these higher oil prices, we may see some green on the screen going forward, especially if they keep it rising. We're at around $72 per barrel of oil. If it keeps going up, maybe hitting 90 or 100, that'll be much more profitable for Chevron. Chevron has lots of free cash. It's always produced a lot of good free cash flow. And with that cash, it could provide dividends, put cash on the balance sheet, acquire businesses, which they have been doing. They acquire other companies within their ecosystem. Gross profits are around 39%, depending on the oil prices. Oil prices are higher, margins go up. And overall, it's just a good oil business. Yeah, I think they're discounted by 39%. The cash flows are just really, really good. And these guys are just consistently producing cash. Very, very modest growth of 3% on the first 4 years, and then after that, 4%. And when I look at that forecast of cash and discount it to today's value, it's 52% discounted. So that's a very good discount on Chevron. The earnings per share give us a modest discount of 14% based on today's stock price. So combined, it's still discounted. So I think Chevron has a lot of upside, especially if oil prices continue to rally up. I think oil companies are going to do quite well. And I'm glad that I've got Chevron stock. Again, another value stock. I think value stocks are going to do well in 2025.